Hey guys, it's GT here, and I'm thrilled to have back on the line the founder of Miles Franklin, David Schectman. David, thanks so much for joining us.
Well, it's nice to be back. It's been a while.
It has. It's been far too long. I really appreciate your time, and what I wanted to do today, if you could take the time, is to focus on the big picture with you, because, you know, the ins and outs day to day of watching gold and silver and these criminals and the speculative casino, as you phrased it, is just, it can wear you out. And I think it's important to keep the big picture in mind as we see Europe melt down, as we see the Fed is, meeting today as you and I are recording this call. That'll impact the markets, risk on, risk off. It's all such a bunch of nonsense to me when you know the truth. So where would you like to begin? Should we focus on the big picture here, or do you want to address some of the news items of the day?
Let's just start with the big picture. When I got into this business in 1983, the first thing that I decided was that the only way you could make sense out of this market was to step aside from the day-to-day and come to a conclusion of where are things going. If things go up and down and sideways and back and forth, that's unimportant if you know where the game ends. And unfortunately, I'm here to tell you with no doubt that the end is not a pretty sight. And I suspect that the next generation will focus back on my generation and wonder how we screwed up such a good thing, and that we really did. And I like to think that there are certain dates and certain events that got us to where we are now, and once we understand that, we can look ahead and see where we really have to be going. I like to start with fall of 1971, when Nixon took us off the gold window, closed the gold window, took us off the gold standard, and from that moment on, there wasn't a currency in the world, not a single currency, that was either redeemable in gold or fully backed by gold, and it became a casino. GATA Secretary and Treasurer Chris Powell has a classic quote. He says, "There are no markets anymore, only interventions." And this applies to every aspect of economics and finance in the Western world. Free markets are dead. First, we went off the gold standard. And then in November of 1999, under the Clinton administration, we allowed the banks to really take over. Congress repealed the Glass-Steagall Act, which after the Great Depression, or at the beginning of the Great Depression after the stock market crash in 29, separated commercial banking from investment banking. And now we have the too big to fail bank monstrosities, and they really are controlling everything. When I look at investing, Sean, I don't think it exists. You're dealing in a casino atmosphere that's rigged against you, in which the big money is in the hands of hedge funds and banks whose motivation for profit has nothing to do with the big picture. They're interested in how much money can I make on this trade, this second, this minute, this hour, this day. There's no long-term views, which is why the prices and the markets jump back and forth in apparently no sensible manner, none that I can see. And when normal people, decide that they would like to invest, they're really the odds are stacked against them.
Yeah, you're absolutely right. And what we have posted at the top of SGT Report today is this piece from the Jamie Dimon hearing in front of Congress, where a man is truly speaking truth to power. He calls J.P. Morgan Chase CEO Jamie Dimon a crook right to his face, and he doesn't get arrested, doesn't get gang tackled, doesn't get tased, but it was really nice to see somebody actually speak the truth while the cameras were rolling, because this Congress is just rolling over, and you're right, everybody seems to embrace this Wall Street speculative casino.
Well, we have no choice. The world really is too big to fail, and that's not just a handful of banks. It's the counties, the cities, the states, the countries, GE, GM. Everything is so interlinked with derivatives and counterparty risk and leverage that they have to support everything. And it's no longer a question of whether it's fair or whether it's wise. once it starts to unravel, unlike 2008, I don't think they can fix it this time. As a matter of fact, there was a quote from Jim Sinclair yesterday that I thought is very telling. He said, "The end is not near, it's here."
I was just going to ask you about that. This is serendipitous that you brought up Jim Sinclair. My next question for you was going to be that you've often said that being right has always meant being early. And
yes,
you say
unfortunately, you have to be early. Well, first of all, I was very naive when I started looking at this market in the late 80s and in the 90s. It seemed that things should always be falling apart soon, now, and they never did. And I guess when you have some very smart people with an awful lot of money in control, there are always ways to come up with things we don't expect and to kick the can down the road, which they've been doing. But sooner or later, you can't kick the can down the road. It runs into a wall. And Sinclair, at least from his perspective, and he has my greatest respect, he's almost always right with his big picture analysis. He's correct. There's no place to kick the can. Europe is a basket case. Our economy is grinding to a halt. Japan has been comatose for 20 years. There's just nothing that can fix this and nothing that can save it. It's just simply a mathematical certainty that we're going to pay the price for decades of malinvestment, of expansion of credit and leverage. You know, the old saying, all debt is repaid either by the borrower or by the lender, is absolutely true. And that's the moment of truth that we're going to run into. The problem is, before we deal with the end game, and it's very, very close, they're going to try with all of their might by currency creation to buy as little extra time as possible. There's not going to be much. I do think that when the Fed meets this afternoon, just by looking at the market and what's going on today, the big money is essentially betting that the Fed will not discuss QE3 as an immediate solution to the problem. They're going to do it, might be a month or two later. All of this will have a political effect, whether you like it or not. I think it means that Obama and the Democrats are going to have a very difficult time staying in power. And you know what? I don't blame the Democrats, and I don't blame the Republicans. I blame all of them. The deregulation that put us in this mess took place under Clinton. Bush screwed things up severely enough to allow the liberals and Obama to take office. So, I mean, who do you blame? There are no heroes making the decisions in Washington, and the few voices of reason, including Ron Paul, they just don't carry enough clout to fix anything. So as far as I can see, the Fed is not going to use its last bullet at the end of its ammunition. The economy isn't bad enough. If the stock market were 1,000 points lower and they were desperate, they'd come out with QE3. But things aren't bad enough now. They don't dare blow it now because there'll be nothing left next time around. And I think the next time will be by fall. So my suggestion to people who agonize over the non-movement or the slow movement of gold and silver should just look ahead a year or two and ask themselves, where will precious metals be in 12 or 24 or 36 months? Where will the dollar be? There are certainly some signposts that we can look at. Once the dollar drops below 70 on the U.S. dollar index, it's all over. That could happen very quickly. Right now, the dollar looks strong because the euro is weak. In the land of the blind, the one-eyed man is king, and the dollar is the one-eyed man right now. It has no real inherent strength. It's the best of some bad choices. So the problem is, Sean, as I see it, and I try and be very realistic about this with my own investment money. Forget the fact that I own a precious metals company. I'm still, just like you and everybody else, I have disposable income, and I have to decide what to do with it. Gold looks good to savvy investors when everything else looks bad. And right now, there is no place you can go with interest-bearing and get a fair return on your money. The stock market is on the edge of a cliff with an economy that is struggling to keep above water. That's not safe. The real estate market is far from bottoming. If you take away the main asset classes of real estate, bonds, and stocks, what does a person do with their money? And my solution is to get it out of harm's way. I don't need a return on my principal. I want a return of my principal. And the safest way to do that is to be out of the currency that will certainly be increased to levels we've never even imagined before to keep this game going just a little bit longer. People who own gold and silver will be fine. And the people who stay in paper investments, wherever they are, I think they'll watch a lifetime's worth of hard work and gain go down the tubes by being in dollars. It's not the place you want to be.
Now, I know that everybody listening is very well informed about the massive paper manipulation of both gold and silver, particularly silver. When you and I talked not too long ago in one of our last interviews, you had mentioned that you were selling some of your gold, a lot of your gold, I think, to buy silver. Do you still feel that way? Maybe you just give us a cursory overview of how you feel about gold as money, not an investment, silver as money, not an investment.
First of all, gold is not an investment, and I'm talking physical gold. The problem that people have, who I hear from all the time, is that they think it's an investment. Just because something goes up doesn't mean it's an investment. And gold going up just is a reflection of the dollar going down in value. Gold is it's your winnings at the casino, your earnings. You take it off the table, you put it away. You don't gamble with it. So gold is a monetary asset. It's not only is it the best monetary asset. The BIS, as far as I know, has just reclassified gold as a Class 1 asset instead of a Class 3 asset, meaning the banks can value it in their reserves or as collateral at full value instead of at half value, where it's been as a Class 3 asset for a long, long time, which will give the banks reason to accumulate more gold. I think that's a very significant thing for gold. Silver, on the other hand, although it is somewhat of a monetary asset, it's the poor man's gold, as they say, is also primarily an industrial metal, and it trades that way. And if you have an economy that's sinking, even if there's inflation and reasons to own silver as a monetary metal, there are crosswinds going on. But sooner or later, I think the supply and demand will dictate that silver wins. Right now, the relationship between gold and silver is 56.82 to 1. It takes almost 57 ounces of silver to buy an ounce of gold. That's not right. I think it's going to end up at some point in time anywhere between 15 and 30 ounces of silver will buy an ounce of gold. So, why buy gold when for half the price you can buy the same thing in a sense in silver? There's another thing I would like to suggest that people consider, Sean, right on this same topic. The reason that I don't have all of my money in gold is because there is always a chance, and I think it's a reasonable chance, that the government, as it gets desperate and as a new currency comes into play that will most certainly have some level of gold backing, will have motivation to confiscate gold. I'm not saying that it's going to happen, but I'm saying you really shouldn't rule out the possibility that it could happen, which leaves the investor with two choices. You can either own your gold offshore, and we offer truly the best program in the entire industry with our storage program with Brinks, insured by Lloyd's of London and Montreal. It's safe. There's just fabulous features that nothing else can equal, and people can call Miles Franklin and discuss that with Andy Schectman or Joel Kravitz, and they'll explain what it's all about. Or you can do as I do. I have some of my gold stored in Canada, and I also diversify. Half my money is in gold, the other half is split between silver, platinum, and palladium. If gold is ever confiscated, I want to own non-dollar assets, physical commodities that can be bought, sold, quoted, and traded. I diversify my hard metals portfolio, not just based on is it a good buy or is it profitable. You would do well in any of those areas that I just mentioned. But I want to have something that I can keep if there's something that I have to turn in. And there's just no way that the government would have any reason or motivation to go after silver, platinum, or palladium. So those of you who are listening and understand the necessity to diversify out of dollars into gold, save half your money and put it into the other areas. You'll be It's not a question of which one will do better. It's a question of which one can I keep if everything goes awry. That's the way that I look at it, Sean.
Well, David, before we let you go, just in this last couple of minutes, these 40 and 50% retracements just scare the crap out of people, but we've seen that throughout history. And as Jim Sinclair has said, be right and sit tight. And I think this is the place to be when we see what's happening with this world economic chaos happening, is be in physical silver and gold. I'm ranting. Let me ask you about...
Relative to your Sinclair quote, I think that he also has quoted Bert Seligman, his stepfather, where he says sitting tight is the hardest thing to do.
It is.
That's the point.
Yeah.
That's why you need hand-holding. It's easy to get into something, but it's really hard not to sell too soon.
Yeah.
That's the skill, and I'm not saying we can be perfect at that, but I think we can do a better job of that than people can on their own, and that's part of what we work very hard to share with the people who become our friends and our clients.
Can you just toss out a website and a phone number for folks?
Sure. The phone number is 800-822-8080, 800-822-8080, and the website is Miles Franklin, MILESFRANKLIN. Just Google Miles Franklin, and you'll pick up our web page, and you can just drop your email in there, and you'll automatically be signed up for the newsletters.
Okay. Well, David Schectman, the founder of Miles Franklin, thank you so much for your time. We appreciate it.
It's my pleasure, Sean. Let's do this again sometime.
Okay, talk soon. Bye-bye. Thanks for tuning in, guys.